like at least feeling somewhat good about.
Yeah, I mean, sentiment's definitely gotten better.
Yes.
Some of the internals of the way the market's been acting is better. I feel like the bears are in some respects getting a little bit nervous, okay?
Yes.
Mike Wilson, Morgan Stanley, I know you know the name.
Huge fan.
While we didn't get the definitive reversal last week for equities we were expecting, the door is still very much open for our call to play out. It's been negative, though it could develop at a bit slower pace. i.e., we thought things might fall apart by now. They haven't, but we're still sticking to our guns.
Yes. So I've seen the signs of the things I just mentioned, as well as, consumer credit is deteriorating, but it's not deteriorating as much as people think or thought it was going to. Inflation in energy is negative now, right? You've got it in natural gas and in oil. You also have food inflation. Tyson's report, meat prices actually down year over year. Other areas of food inflation, there's still inflation, but it's at a decelerating rate. So those things, along with a strong labor market, wage growth is decelerating overall, but that might be mix shift. It's fine, basically. The consumer's in a better place, so that's positive, for the economy. We're constructive, kind of some consumer names that are particularly cheap, that are particularly beaten up, that we think can outperform this environment. And while they have moved nicely this past month, they're still very cheap.
Does one start with an M?
One does start with an M, and I know we've talked about this name before, and I like to be more diverse in my recommendations. I do have other recommendations, but this one is particularly interesting. Macy's, exactly. So Macy's is, I think, remains very interesting, and what the reason we like it is really, there's been really a transformation in how the management is approaching their business. Right, they've been very tight on costs, incredibly tight on inventory management, and also on merchandising. They're going to be launching numerous new private label brands. They're also re-engaging with their brands in a very constructive way, looking for new brands. So, will Macy's get to the other side and become as compelling of a retail destination as the old Macy's? I don't know, but they have many shots on goal. And the stock in this, who knows where earnings are going to be this year, is trading at about 6 times this past year's earnings, which we know are, fairly much in the bag because they basically pre-announced in early January. And, with a stock in kind of the low to mid 20s, with having made over $4, having made $2.50 pre-COVID, taking out enormous costs, I feel like there's a real margin of safety and valuation with a management team that really knows what it's doing.
I'm glad you mentioned the consumer. It's one of the reasons why people like Mike Wilson say, well, okay, maybe this develops at a slower pace because the consumers remained strong.
Yes.
The Fed hasn't been able to really crack the labor market.
Yes.
My question, though, and by the way, Take-Two and Activision, they are out. We're going through it. You're going to hear from our reporter momentarily. We'll show you what both stocks are doing. But it sets up tomorrow for Powell's speech.
Yes.
And whether the jobs report on Friday is a problem now for what he might say tomorrow, different from what he said in the middle of the week, of course, when they had the decision. J.P. Morgan's Marko Kolanovic just added another hike to his outlook, right? They're going to go again in May. Says it, quote, pours cold water on the Goldilocks soft landing trade.
Look, I think that the strength we're seeing suggests that things will be better for longer, and that means rates will be higher for longer. What I think that does, though, is that puts more pressures on enterprises because the labor market is tight, wages are going up, so they're trying to save in other places, like the cloud, like enterprise software. I think that's dramatically underappreciated by the market because those stocks are still very expensive.
Oh, you still think software is too expensive still?
Absolutely, yes, very expensive. Not necessarily every software stock, but yes, by and large, it's very expensive. People are acknowledging that software spending is slowing, but they all think it's going to pick up in the back half of the year. Why is it going to pick up in the back half of the year? Maybe it was overbought. Maybe also the companies are dealing with wage inflation, and so they don't have as much money to spend on software because the labor market is tight. The same thing with the cloud. These stocks are expensive because people think this is just a minor cyclical blip, but maybe it's actually a structural shift in the demand for these products moving forward because of the overbuying, because of other pressures on their cost structure, and that's actually where you should be more cautious and conservative.